On Wednesday, May 3rd, the Federal Reserve raised the funds rate up to a target of between 5 and 5.25%. This matches the highest level in 22 years. Now, the futures market suggests that this move ends the 13-month tightening cycle that was one of the most aggressive in history. The rise in rates initially was a huge headwind for cryptocurrencies as Ether lost 75% of its value from early April 2022 to mid-June of that same year. Now, of course, part of that move was fueled by negative headlines within the crypto space itself, but there's little question that cryptocurrencies have some level of interest rate sensitivity. This year's been a different story as Ether has rallied 60%. Part of this is on the belief that the Fed is now pivoting from tightening to easing. The CME FedWatch tool now suggests the probability favors 100 basis points of easing by the end of 2023 and 225 basis points of easing by the end of 2024. Now, the interesting thing is that this inflection point so far has benefited the risk assets that are not tied to the underlying macroeconomic condition. In other words, stocks have traded sideways while gold and cryptocurrencies have had significant rallies. Now, the CME has recently launched options on both micro Bitcoin and micro Ether contracts, but we're just going to be using the micro futures for these examples. If a trader believes that Ether will rise from here, they could express that by buying the May micro Ether contract at $18.90 and targeting a move up to the psychological level of $2,500. A stop for this trade could be placed below at $1,400. This trade can make $61 per one lot if the target is reached and risks $49 if you're stopped out of your level. If a trader believes that Ether will fall from here, they could express that by selling the May micro Ether contract at $18.90 and targeting a move back to the 2022 lows of $1,000. A stop for this trade can be placed above at $2,300. Now, this trade can make $89 if the target is reached and risks $41 if you're stopped out of your level.